Okay guys, good morning, welcome Friday 19th of August. Hope you're all well, ready to go. Last day of the week obviously, and it started with perhaps more action than we've seen throughout periods of this week already in terms of strong risk-off sentiment here in Europe. The top two charts that you can see on my CQG, on the left here, this is the Euro stocks, on the right we're looking at the DAX. And both of these indices starting on the front foot, actually opening higher towards the top of yesterday's range. But you can see here the Euro stocks breaking below its pivot level, 2990. The DAX doing the same, not only breaking through its pivot level, but also then testing yesterday's lows, which in both instances also coincides with S1. On the bottom chart here, you can see the S&P. And the S&P has been dragged lower, as you would expect, by European indices, moving lower, just breaking below its pivot level, not quite yet testing its lows seen yesterday. So we'll see whether European equities remain on the back foot. As you would expect, you've got bonds moving higher this morning, so that's the Bund, just slightly, actually nothing too significant here, Bund and T-notes. But the bigger move is in the dollar. This chart on the bottom left now I'm showing you is the euro versus the US dollar. So continued dollar strength here, breaking below its pivot level, and the same in cable as well. So we've got a stronger dollar, we've got weaker stocks, and genuinely it's risk off. Added to that, we've got oil on the back foot. Now, please do bear in mind, oil is now the October contract, so we've rolled over in oil, we're trading the October contract. Make sure you're not trading September, because if you're holding on to one contract long in September, then you will be receiving a delivery of 1,000 barrels of oil, which you might not want. But it's the oil market that's also adding to this risk-off sentiment. On the other hand, trying to find out the reasons behind this, well, it's really light market volume, isn't it? We've had pretty strong risk assets over the course of the week. But the rationale behind oil moving, perhaps there's some more fundamentals behind that. Oil has been officially in a bull market territory. We've had, look at this, over the last 5 days in the oil market, we've been pushing all the way from $40 all the way up towards the $50 handle. Today is looks like we might get a test of the pivot level down at 48.43, which will be the biggest down day for a number of weeks. And the rationale behind that is that obviously over the last few weeks we have had talks, rumours and hints from OPEC that they will be taking action on a freeze. By that I mean on a production freeze. And since Saudi started to make these voices, oil has rallied 10%. However, this new freeze being mooted is for 34 million barrels a day. That's 34 million barrels a day. Before, the freeze was being quoted at 33 million barrels a day. So I think the oil market's beginning to think, well, hang on a minute. You're going to be freezing at a heightened level of supply. And that reality and that understanding of exactly where the oil market stands is probably going to weigh on oil today, I think, the more that gets digested, especially given the fact that we've had a 10% price rise over the last few days on anticipation of this freeze. They're freezing at a higher level. They're freezing in a different market environment compared to where we were in the spring when we were getting more news about a potential freeze. And yeah, I think the market's going to be a little bit underwhelmed by that, certainly. Okay, let me just review a little bit about yesterday before I get onto the data today. Main mover yesterday, clearly the pound. Really impressive, actually. Great Britain's data here, the retail sales data, given we are now firmly in a Brexit world. But UK retail sales were expected year on year at 3.9%. The year on year figure came out at 5.4%. Month on month, including auto fuel, was expected at 0.2%, and it came out at 1.4%. So fantastic data out of the UK, surprising data out of the UK, and you can see how cable reacted. It actually moved just over 1% off that data. So for all of you guys that were poised and ready to trade that UK data, I know Ant was squawking that, preparing you guys well. Hopefully you were able to take opportunity off that. That's a great trade, both fundamentally and technically, as you get the burst through S1 as well. So R1, I should say. So Great Britain absolutely on the front foot, and I can't not mention our medals table performance, can I? 22 gold medals so far. Great Britain has more medals than France and Germany combined. It's quite odd that we are able to do this, yet when it comes to football we fail so flatly on our face. I think it's just we're particularly good at sports that you sit down in. Sailing, rowing, horse dressage, any sport that has a high barrier to entry, we seem to do okay in. But now it's back to the track and field. I assume China are gonna overtake us, of course. If you were to say, however, this was on a per capita basis, you know, Great Britain should feel very proud of itself, because obviously, even though it's behind the United States on the medals table, if you look at the per capita basis, we're doing very well. Well, we're not doing as well as Grenada or New Zealand on that front, who should be very proud, especially New Zealand. I think that a wonderful performance per capita basis. We actually sit 18th on that table, so Britain, don't mention the cup, just be happy with second and get on with it. Looking at the calendar for what we have today, we've got some more UK data coming out at 9:30 this morning only. Well, I mean, actually this is quite interesting because it's the UK public finance data, sector net borrowing and central government spending as well, so that will be interesting to review in the post-Brexit world. Just keeping an eye on the ladder. As I give this briefing, I am short the S&P. Again, I was short the S&P before I started the briefing, as you guys know. And I took it off because European equities just pushed up above their highs, but now you can see the S&P is moving. And just from a psychological point of view, again, as I try and help you guys and share my trades with you live, I'm trying to do that more and more now. I was happy to get out of this short when the DAX and Eurostoxx popped back above yesterday's lows. That was my rule, that was the discipline. I'm happy to get back in again at a decent level. Now European equities are moving lower. It's very important to try and remain flexible and not get married to positions, but try and take the opportunity when it's there. So let's see if this works out. You can see the stop nicely placed above the pivot level. I very much doubt I will be getting out with a stop order, as you guys know. Proactive exits, please. But yeah, short the S&P, and the S&P is just making new lows as I talk. So keep an eye on the risk-off market in front of us. We've got UK data coming out at 9:30, 1:30 Canadian data, and that's it really. That's it for the session. But certainly more activity than I was expecting already this morning, so well done for you guys that were in nice and early. You know, you do get market activity really from the get-go at 8 o'clock, so please do continue to come in early to take advantage of that. For some of our trainees here at Amplify Trading, it is going to be your rotation month today, so month 1s into 2s. And for you guys in month 3, obviously, if you're up in your account, we'll be continuing to back you. But for everybody, we'll